immigration is also stagflationary. We already saw in the last employment report upward pressure on wages, and of course that also really means downward pressure on employment if we're going to do, in particular, deportations at the current pace. So the conclusion is, it is not surprising that the Fed is beginning to worry about their mandate being torn in the opposite direction, because inflation higher says that should be hiking, GDP growth lower says they should be cutting. So that's why at the moment they stay put, and the conclusion therefore is that he didn't really give much other than say we will likely be cutting, and that's what's in their dot plot. But the conclusion is this is a very difficult situation for them when there's both, as he said, meaningful expectations of upward pressure on inflation and at the same time a revision down in GDP growth.
Torsten, he alluded to their data capture, which is perhaps showing a more resilient GDP, a better, stronger America. Steve Raschuta at Mizuho is heated about this, that we could see GDP better. Is that in any probability for you?
Well, I think that when it comes to a particular trade, forgive the picture here, but the pig is coming through the python. Someone needs to pay for the tax increase on imports. Tariffs have gone up, and if companies are not passing this on to consumers, let's say that inflation does not go up as much as we would have expected, then the conclusion is, well, then earnings will simply be going down more, because this tax increase means, of course, that you will begin to see some downward pressure on GDP and potentially some more downward pressure on earnings. So that's another way of saying we saw effective tariff rates go up from 3% in January to now 18% today, and that effect will still be playing out. And he said very clearly he does expect a meaningful increase in inflation over the coming months. So combining that with, he said, we could also see a cooling down in the labor market. It does mean that just maybe inflation will not go up so much, but the consequence of that will be, well, then we will instead see tariffs coming through instead through lower GDP growth and a bigger hit to earnings.
And he expects to see some data on that front in the upcoming months. Right now, let's bring back in Bloomberg's Michael McKee. If you are just joining us, we did just conclude the Fed's press conference where, Mike, you put him on the spot there with the political question. I don't know that he loved answering it. We were all glad that you asked it. What was your takeaway from the press conference in terms of what you felt was the most new information that we gleaned?
Well, I think the takeaway is fairly obvious here, and I'm not sure that my economist friends all agree with me, but I think the line that you want to look at is how many times Jay Powell said nobody on the committee has a lot of conviction about these forecasts. In other words, this is all going to change, and we had to write down something, so we did. So don't take us seriously in terms of the number of rate cuts. Don't take us seriously in terms of the forecast. It's the best we can do at the moment, but we know this is all going to be different. So don't, I would translate that into don't invest on the idea that the Fed is going to be doing 2 rate cuts by the end of the year.
Michael McKee, thank you so much for being with us. And Stephanie, we were kind of laughing around the table when he said, we just kind of turned to each other and say, what did you write down? You know, I don't know. I'm kind of throwing a dart at the dartboard, but it does feel like they are trying to message something to markets. And do you think that this is saying, ultimately, we understand our dual mandate and we are going to respond potentially to a weaker jobs picture?
I think it's saying there are risks to both sides of our mandate. We don't know if it's going to be on the inflation or the growth side, and at this point we're in wait and see mode. I think the ultimate destination will be that the economy holds up okay. Inflation does pick up. I totally agree with Torsten's comments. If it doesn't pick up, that's almost a bad sign because that's going to come from company margins. But at the end of the day, we'll come through this okay, and then the focus will be on 2026 for markets, which is an economy that's just fine.
Your core ability is the math and the dynamics of our math. The toughest math is productivity. Is productivity still in play? Is there a total factor productivity right now that we underestimate?
Yeah, I think that's certainly the case, and hopefully it's the case, especially given that our labor supply is shrinking. So we kind of need that to some extent. And our base case is that the productivity should be fairly solid throughout the course of this year into next year. It is hard to estimate. But I do think AI is going to slowly have that impact over the course of the next couple of years.
With productivity gains, Torsten, and I'd love you to weigh in on this because you've been really good on this. We're not necessarily going to get recession. A lot of people say that's not their base case, but we are going to get a slowdown at a time of increasing inflation. People seem to think if there's a recession, that's really bad. If there's not a recession, that's really good. What is that breaking point where you have growth slowing enough that it becomes really terrible for companies in terms of where inflation is and growth just not keeping up?
the tug of war, Lisa, at the moment. Namely, we do have a number of things that are weighing on growth, as we're talking about here, namely higher oil prices, higher tariffs. We now also have restrictions on immigration, meaning removing labor. All those things would argue for GDP growth slowing down, as the consensus expects over the coming quarters. But at the other end of the rope in this tug of war, we have definitely the productivity increases that we potentially could see. He did respond to the question around, will this be labor replacing or labor augmenting? And we still just really don't know the answer to that question. Yes, it is the case in the census surveys when businesses are asked, have you adopted AI in the last 2 weeks, that about 10% of companies and a rising share is saying, yes, we are now using today AI tools to improve our productivity. But the speed with which productivity gains, and to Tom's point, total factor productivity, namely how well labor and capital work together, the speed with which we'll see that in the data is probably going to take quite a bit longer. So I worry more about the cyclical downward pull on GDP growth, because I do think that over time we will see the AI gains, but it's just probably not going to come quick enough relative to some of the downward pull coming from the cyclical forces of tariffs, higher oil prices, and at the same time also the restrictions on immigrations we're seeing.
Given that backdrop, Torsten, do you think that based on what this Fed said, they are just moderately restrictive? Do you think they're more restrictive than that? Or do you think that this really is closer to neutral than many people think?
Well, that's why this discussion, Lisa, around, as we have all talked about for so many years now, our star and where are we relative to that. Note how he didn't bring that up today. This conversation about where are we relative to neutral has almost become a backseat issue, because now there are some cyclical issues that are overwhelming the structural discussion around where neutral rates are. So, but I do think that the Fed's own framework and the New York Fed's estimates would certainly say that neutral is lower. And as he did hint a little bit at, that we are in slightly restrictive territory. But the issue still here is they are battling. The major issue is that, as he said, they expect to see meaningful upside pressure on inflation. And that makes sense, not only headline inflation because of oil prices, but also because of tariffs. And again, because of the emerging pressure we're seeing on wages. So the short answer to your question is, I think that this discussion of restrictive or not restrictive is taking a little bit of a backseat, because we now have some cyclical forces pushing inflation up over the coming months.
Torsten Slok of Apollo, thank you so much for being with us and for those comments. Joining us now is Subhadra Rajappa of SocGen. Just curious, Subhadra, what you make of this idea that rates are not very high, that policy is modestly restrictive, but not necessarily causing the restraint that many people would expect. Do you think that this was an appropriate Fed meeting?
You know, let's call a spade a spade. I must say I didn't get a lot of new information out of this meeting. I think Mike Mickey summed it up. There's a lot of uncertainty. The first half of the year, the economy's been extraordinarily resilient. There's a chance that we get higher inflation in the second half. There's a chance that the growth could slow down as well. But that doesn't really give us a lot of information on exactly what they're going to do on the policy front. Yes, the dots are showing 2 cuts for this year, but there's a good chance that they don't cut at all this year, or they have to cut as early as the September meeting if the data deteriorates. So for me, the informational value was very little. I think that there's a lot of uncertainty, which was highlighted again and again during the press conference, and I think that they're going to wait till they have enough information to confirm a rate cut. So for me, this is status quo. The market pricing hasn't really changed. The bond market really hasn't reacted much. So we need more information.
Subhadra, is the information going to come in the yield curve? We had a really informed question come in about the vanilla 2-10 spread, or I'll let you pick the spread that matters. Are we going to go back to yield curve steepness as we saw many years ago?
Yeah, the 530s part of the yield curve has been steepening. The Fed, you know, the front end is pegged to policy, so the 2 years is kind of stuck between 3.75 and 4%. And the 530s part of the yield curve has the potential to steepen. But again, a lot depends on what we get out of that big, beautiful bill. If it is actually more deficit inducing than what we are anticipating, then there's a potential that we could see a rebuild in term premia. But you know, those negotiations are still ongoing, and really it's the fiscal side that determines what the shape of the yield curve is, not so much how much the Fed is going to cut, because cuts between now and the middle of next year are quite modest. We're looking at maybe 75 to 100 basis points of cuts at the most.
Stephanie, where are you on the fiscal space? I mean, I think this is, Bob Michael brought it up and others before, but this is a huge mystery that's unspoken. We don't have a clue where our debt and deficit is doing. We have no clue.
We have one clue, and that's not good. So it's not heading in a very good direction. We all know that, but I think the bond market has largely internalized it. So what we're talking with clients about is, at this point, once they actually pass the reconciliation bill, base case is there's not a big sort of bond market riot as a result. It's a risk, but I think maybe over the summer, the bigger news is going to be the inflation prints, which could be a headwind for equities, and the employment data, which might seasonally surprise, plus the downward sort of projection on immigration. That could be sort of the bigger news over the summer. I don't anticipate it's going to be a surprise on the deficit front, because we largely know what's going to be in the bill, and they're going to kind of negotiate from here. But I don't expect it to be a major surprise at this point.
All I can say is this feels a little bit, I keep saying this, like when you put too many commands into a computer and it says, I'm buffering, and it just kind of, we have no idea what the headlines are going to be in a couple of months. Subhadra Rajappa of SocGen, thank you so much for joining us and for really being honest, which is, we didn't really learn all that much. Joining us now is Jeff Rosenberg of BlackRock. The one thing that did stand out was this idea that this is not a Fed that feels urgency to cut rates, even though you have the president basically jawboning them and you have people in the market saying we are seeing cracks. What was your take, Jeff, from this meeting?
Yeah, you know, there's something we're not talking about, which could have been, you know, the headline, which is this is the first statement of economic projections post the tariff uncertainty. And mostly he got away with not really talking about that. Torsten just highlighted it a second ago. It's stagflationary. I don't think anybody raised that once that word ever came up. So we really kind of pivoted away from what might have been kind of an interesting storyline to the storyline that we're hearing, which is watching paint dry. And I think that's an excellent outcome for the Fed. That's what they want us to talk about, paint drying, and not the Fed opining on the impact of policy. They really ended up pivoting the conversation towards a repeat of nothing to see here, and you know, we don't know, and it's much more about the uncertainty than it is about the forecast that we just wrote down. I think that's kind of an interesting takeaway. I think, as your previous guest just highlighted, that is the takeaway that the markets are you know, having from today. And when you listen to the opening press conferences, I pull up last month's press conference and you can follow along. It's almost verbatim, with the exception of the insertion of the SEP changes, which he downplayed, and maybe the introduction of, you know, waiting for more information as opposed to waiting for the uncertainty to clear. This is very much a repeat of what we got last month.
Jeff Rosenberg, when you look at what the president said in the lawn today, we're benumbed by presidential criticism of Jerome Powell. Is this a Fed, as we're all half asleep in a snooze fest, representing the haves in the financial industry? Or are they actually representing a good part of America that does not agree with this dialogue and says they're flat on their backs right now?
There are a lot of questions in there, Tom, for me to avoid answering. So I'm going to do my best imitation of Powell to pivot to answering it the way he answered Mike McKee's question, and basically restating what, you know, he wanted to answer, which is they believe they're following, you know, the right path. They are answering the right questions. They're pursuing the policy for the benefit of the economy overall that benefits the most of Americans. Okay. And I think kind of he answered that question the way, or I'm answering that question the way Powell answered McKee's question.
Absolutely gorgeous, Jeff. Very well done. I will answer this. I will ask it.
Oh, it's compliance from BlackRock.
Yeah, you're doing great. So, Jeff, you passed that compliance test. I guess another way to ask the question a little bit more directly is, to your point, this was not a Fed who was challenged, a Fed chair who was challenged on the stagflation point, who said, when your dual mandate really comes called into question, would you tolerate higher inflation for longer in order to protect a labor market that has left a lot of people, to Tom's point, out, and that has left people behind in a participation rate that is lower than we previously had? Were you surprised that that wasn't asked, that this is a Fed that really hasn't had to address that thorny question?
Yeah, and it's going to be the more interesting conversation. You know, I feel like this is the period where we're kind of between two environments, where the kind of pre-tariff environment, and he got asked the question, you know, hey, back in December you were cutting rates. Why aren't you cutting rates now, given that inflation is even lower than it was in December? And he very kind of clearly laid out there's been a change in information, and the change in information is the impact, the uncertainty of much higher than expected tariff policy. What we're waiting for is it to show up in the data. Now, when he got pushed back from one of the questions of, well, are you data dependent? It sounds like you're forecast dependent. Why are you now saying you're forecast dependent when you always tell us you're data dependent? And he gave the answer on, well, we have to be forward looking, not necessarily forecast dependent. And so we're going to get to this period where the inflation does show up in the data. And now I think the question is, and everybody on this show so far has been calling it the inflation increase. Let's be careful here. Powell is not calling the rise in inflation an inflation increase. He's calling it a temporary or one-time pass-through with the expectation that it goes back down. That's not inflation. That's a one-time pass-through. The difficulty we're going to have is, how do you know while you're seeing the increase in the prices passing through that it's one time? And how long are you going to be willing to wait to figure that out? That's going to be the more interesting challenge. And then, Lisa, to your question, it's going to press on the dual mandate, because if they're seeing the increase in inflation at the same time as we're seeing, which we're starting to see the very early signs of right now, the slowdown in the labor markets, if that accelerates, now you're going to have this tension between the two policy goals. Yeah. They kind of address it a little bit with like the distance between the two goals and the time expected to meet those two goals. But they're going to have a lot more questions to answer about how they're balancing those two trade-offs.
Jeff Rosenberg of BlackRock, thank you so much, as always, for being with us. Stephanie Roth of Wolfe Research still with us, and I'm curious, for the final word, how you see this dual mandate as playing out. And you had a great question for the Fed chair that was not asked, especially at a time of such confusing, frankly, data.
Yeah, I mean, I think the question we want to know over the summer is, when we start to see payroll gains slow down, potentially below 100,000, with the unemployment rate remaining largely steady, how does the Fed react to that? And our base cases at this point, and certainly after today, they seem to be very much in wait-and-see mode, and they're probably going to do nothing, which then means the two cuts are going to have to fade to no cuts this year.
Is a 4.2% unemployment rate now the same as a 4.2% unemployment rate 30 years ago? I'm not sure it is. There's a lot of noise in there. I'm not sure it is.
Yeah, that's totally fair. And of course, they're going to think about the directionality here, and they're expecting it to go to 4.5. I'm worried it goes down to closer to 4% with the impact of inflation.
Turns around and goes the other way.
It might go the other way, and I think that's the thing that is going to be a really interesting dynamic for the Fed to potentially watch here. This is a real tightening of the labor market. You have the cross currents with the slowing economy, and then the real tightening of labor supply. We had 530,000 people from Cuba, Haiti, Nicaragua, Venezuela. Their visas are effectively expired overnight.
Stephanie Roth of Wolfe Research, looking forward to continuing this conversation on Friday. Meanwhile, coming up on the close, former Fed Governor Betsy Duke, and honestly, I think that's the best question, this idea of, is a 4.2% unemployment rate the same today as it was 20 years ago, at a time of participation rate very much changing? This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:46 on Wall Street. We do check markets all day long here at Bloomberg. Fed Wednesday, we've got stocks higher for now. Stocks have been wavering after Fed Chair Jay Powell warned that tariff-driven economic uncertainty and inflation risk continue to complicate the central bank's bid to ease monetary policy in earnest. The S&P right now higher by 6, 59.89. That is a gain of 0.1%. The big question, will we close above or below 6,000? With 14 minutes to go, we've got the Dow up 7, little changed right now. NASDAQ up 57, up by 0.3%. 10-year 4.38%, but the 2-year 3.93%. Gold down $18 the ounce. That is a drop of 0.6%, now at 33.69. West Texas Intermediate crude just about flat on the day, holding close to 75 a barrel, 74.87, up now by 3 cents. So Fed Chair Jay Powell warning that tariff-driven economic uncertainty and inflation risk continue to complicate the central bank's job. Here's Jay Powell at the news conference.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment.
Fed Chair Jay Powell in remarks broadcast live on Bloomberg Radio. Oil higher on concerns over flows through the Middle East. Oil stocks right now, they are trading lower. We got ExxonMobil down 0.4%. BP down 1.4%. The ADR, Chevron lower by 0.3%. The National Transportation Safety Board has issued an urgent recommendation calling on the FAA to ensure flight crews are alerted to an issue on Boeing 737 MAX aircraft that can lead to smoke in the cockpit or cabin. Boeing shares down by more than 1%. A jury has found Karen Reed not guilty of sex.
Dow. Carol, you said people had different expectations going into the meeting. President Trump wanted to see 2.5% cuts to the rate.
Yeah, not happening.
250
folks.
basis points.
Ain't happening here.
It didn't happen.
That
did not happen.
It's not even in the dot plot.
No.
What was interesting is that in the dot plot, you are still seeing a call for 2 more rate cuts this year. But we're talking about 50 basis points, not 200. Having said that, quick check on where we are in yields. 10-year note with the yield of 4.38. I'm looking at the 2-year yield with the yield of 3.93. So a little bit of movement. Initially, we did see right after the decision, but like as we said, we've kind of worked off some of those earlier levels. So let's just remind everybody, here's what happened. Fed officials, you heard it from Charlie, leaving interest rates unchanged, continuing to pencil in 2 rate cuts in 2025, saying uncertainty over the economic outlook was still high but had diminished, and that the Fed can be kind of patient, it seems like, as it awaits more information. Here's Fed Chair Jay Powell.
We feel like the right thing to do is to be where we are, where our policy stance is, and just learn more. And in particular, we feel like we're going to learn a great deal more over the summer on tariffs. We hadn't expected them to show up much by now, and they haven't. And we will see whether, to the extent to which they do over coming months. And I think that's going to inform our thinking.
All right, that, of course, was Fed Chair Jay Powell earlier at the FOMC press conference. Let's get to it. Let's get more on the investment landscape, also the rate landscape, and how the Fed decision and commentary may affect all of it. Or are we all going to kind of just wait for the next Fed meeting? Ross Mayfield is with us. He's investment strategist at Baird Private Wealth Management from Louisville, Kentucky. Also with us, Bloomberg Intelligence Chief U.S. Interest Rate Strategist Ira Jersey out there in New Jersey. Hey, Ira, I want to kick it off with you. Someone into this meeting, truly, I was listening to Bloomberg television's coverage, really TV and radio's coverage of the Fed decision. Some said it was going to be boring. Some expected not much to happen. Others said it's going to be...
It's never boring for us, right?
Well, sometimes it is. And then others said it was going to be historic because all that is coming at the Fed right now. Why was there such a gap going into this meeting?
Yeah, I think there's some people who think that, firstly, that the Federal Reserve does have to cut interest rates because they see cracks in certain parts of the economy, and then there's other people who are fearful of tariffs and think that, you know, inflation might increase. And you even heard that the last question, which was about how come no one was projecting rate increases, even though there were a number of members who were thinking the Fed's going to be on hold for the entire year and then cut a bit next year. You know, this was as I expected, and what's always interesting about this, you know, we have to, as market professionals, kind of parse every single thing coming out of the Federal Reserve, is the reaction function, right? What is the Fed's reaction function? So we heard a number of if-then statements from Chair Powell, and, you know, those if-and statements could mean, you know, give us at least a little bit of an indication of under what circumstances they'll make any kind of policy adjustments.
Hey, Ross, come on in here and just give us your general overview of how the meeting went, your expectations, were they met, were they not met? What was your big takeaway?
Yeah, I think they were largely met. I mean, I don't know anyone who expected much action at this meeting or a resolution of all the uncertainty that they've been discussing at this meeting, given that we're still in this kind of tariff pause. We have the potential for oil prices to swing and impact headline inflation. So I didn't expect much. I'm on the side of the camp that thinks the Fed should be a little more aggressive in cutting. I think the cracks in the labor market are starting to really accumulate, and to hear Fed Chair Powell say that the labor market is, I forget the exact language, but on solid footing.
Yeah, he wouldn't agree with you, I think, Ross, that the cracks are starting to appear. What data are you paying attention to that he's not?
And perhaps that headline, Microsoft planning thousands more job cuts, that we saw earlier today.
Certainly the anecdotal evidence of layoffs is rising. But if you look at something like WARN notices or initial claims and continued claims, I mean, we're sitting at multi-year highs for a lot of those levels. If you look at some of the employment statistics about people fresh into the job force out of college, the unemployment rate there is at not record highs by any means, but is significantly higher than the overall unemployment rate. So I think it's a labor market where we have tight supply, and especially in this, given the immigration policy, but it is not a robust labor market, and we are well north of a neutral policy. I think that getting to neutral should be more of a goal for the Fed, who doesn't seem to want to get there until the end of 2026 if you look at the SEP.
All right, come on in, Ira.
Yeah, so I just want to say I think that's part of this debate. Like, where is neutral? And there's the Fed will say that they're still have restrictive policy, but a lot of the other information that some of us, me included, have looked at suggests that actually they're probably pretty close to neutral. So unless there's a deceleration of the economy, the Fed probably doesn't have to adjust interest rates. Now, the question is, and to Ross's point, like, they can't wait until the economy is clearly really bad before they cut interest rates. But I do suspect that because of this overhang of inflation and the recent past episode that we just had, that the Fed will try to wait until almost the last minute, and then once it cuts, it'll cut faster. And I go back to the statement that Jay Powell made in May at the press conference, where he said, like, look, we know how to deal with a weak economy. We could just cut more aggressively and get down below the neutral rate to stimulate the economy. We don't want to have to go the other way and have to hike interest rates if inflation were to remain relatively high.
Hey, Ira, a couple more to you, and then we're going to bring Ross back in here. But I'm wondering about a couple of things here. One specifically is the question of AI and the labor force. The Fed chair was asked about that. Carol and I cannot stop talking about this.
No.
What did you make of the way that he answered this question about AI and the effect on the labor force?
It feels like there's a pig pile of all of a sudden people are waking up and saying, okay, there's going to be a lot of jobs lost because of AI.
Well, there's always disruptions. Whenever you have new technologies, there's always disruptions, and you wind up having, layoffs in some sectors, and then the new economy creates other jobs and new jobs. We've done that over centuries, since even before the Industrial Revolution. You've always seen things replacing other things. I mean, we did it 30 years ago, right? When you think about the internet, and in 1995, very few firms had websites. Yet today, everyone does, right? And this is kind of an extension of that. So we created a whole new economy around the internet that now is creating more jobs, whereas robotics and other things like manufacturing, less people are needed to do the same amount of work and labor than was needed in 1970s.
So true, so true. Hey, Ross, just got about 25 seconds left here. Mike McKee saying nobody on the committee has any conviction on these forecasts, so don't take us seriously on the rate cuts. Things will change. That was kind of the message that Mike took away, and he says that maybe kind of means for the Bloomberg audience, don't invest on this Fed decision. 15 seconds. Do you agree?
Yeah, I don't think you can take much away from this Fed decision in terms of actionable investment items. I think you need to watch the long end of the curve, and for that, you need to watch things like the budget deficit and service sector inflation. So that's what I'm watching, and I think you go long duration here.
All right. Great duo. Ross Mayfield, investment strategist at Baird Private Wealth Management. Our own Ira Jersey, chief U.S. interest rate strategist at Bloomberg Intelligence. Do not go anywhere. Counting you down to the close. Over to our TV colleagues. The closing bell starts right now.
Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Alex Steele, taking you through to the closing bell with a global simulcast that starts right now. Carol Massar and Tim Stenovic join us in the radio booth. Scarlett Fu has the day off as we welcome our audiences across all of our Bloomberg platforms, including our partnership with YouTube, Carol, on what might be the least consequential Fed day that we've had in quite some time.
Kind of interesting because I was listening to the commentary earlier on our own Fed special, and there was, I think, one individual who said this could be historic because there's so much coming at the Fed. Another one said this is going to be a snoozer. I do feel like the messaging we got from Fed Chair Jay Powell is, hey, folks, we'll know more, and especially when it comes to tariffs later in the summer, and then we'll have more information to maybe really figure out monetary policy from there.
Yeah, lost track of how many times the Fed chair said, basically, we're in a really good position right now. We like where we are. We're in a good position. We can move if we need to. That's what I heard.
Yeah, and that really raises the question, what's going to be the trigger point, right? When are we going to see any sort of tariff impact actually show up in the data? And what are they going to be weighing at the end of the day? Is it going to be growth or is it going to be inflation? And which one blinks first?
Interesting, though. I mean, they did point out during the press conference that most of the committee members do see a meaningful increase in inflation as we get deeper into the year. But again, to your point, Alex, it's kind of anyone's guess right now as to whether that feed through from the tariffs will actually materialize.
Also, one-off is a one-off, right? Again,
Yeah.
that's transitory, and we saw the predicament the Fed got into itself with that. So is it a mistake or is that sound policy?
Torsten Slok was just on the Fed special. He was concerned because he's talking about that stagflationary scenario once again here, and whether that means that the Fed's hands will be tied, and maybe we don't get much of any action at all. Right now, the market, well, not doing much of any action at all today here, as most of the markets end the day pretty much around the flat line. The Dow Jones Industrial Average losing roughly about 40 points. It takes a while for these numbers to settle, but no matter what happens, it's going to be a decline of less than 0.1% on the day. The S&P 500 only down by 2 points, so we'll call it unchanged on the day. 59.80 and change is your closing number. The NASDAQ higher by about 0.1% on the day, and the Russell 2000 higher by 0.5%.
All right, quick check on the S&P 500. Almost an even split, guys. 236 names to the upside. Alex, we've got 261 names losing ground today, 6 unchanged.
Yeah, you can kind of see that in the IMAP function as well. It's sort of a mishmash of what's up and what's down, but not a lot of movement either way. Energy is the worst performing sector, right? Down 0.6%. Tech, the best performing sector, but only up by about 0.4%. So super calm movement all across the board.
Yeah.
I love mishmash.
Mishmash. It's an official technical term. Did you not know that?
I know it now.
It's mishmash go on the terminal. All right, let's get to some of the individual gainers. Coin, number one gainer in the S&P 500, folks. Up.
Whoa.
I know. Yeah. I love it when I can surprise you.
I know. I was paying so close attention to Jay Powell. I'm missing all the real action here.
All right. Well, there was action in Coinbase today, up 16% in today's session. Billionaire Michael Novogratz coming out saying that stablecoin legislation will push traditional financiers toward cryptocurrencies. You also had Coinbase introducing Coinbase Payments, a stablecoin payment stack for commerce platforms. And you might remember yesterday, JP Morgan came out saying it's launching a pilot for a token called JPMD, which represents dollar deposits. It will transfer a fixed amount to Coinbase Global on the public blockchain base. This stock is up about 17% year to date. So I just feel like a lot of momentum around that puppy. Marvell Technology, number one gainer in the NASDAQ 100, folks, up about 7% in today's session. Analysts positive on the chip maker following an event focused on AI. At that event, Marvell raised its overall data center total addressable market to $94 billion by 2028, up from $75 billion. This stock, though, is off more than 30% year to date. And one more for you, GoGo.
GoGo.
It's not just a dance from the 60s. Up about 15% in today's session. You know, Wi-Fi while we're flying.
Yeah. Has that improved?
That's a great point. Every time I fly, I can never get Wi-Fi anymore. I think it's me.
No,
but
I feel like it definitely has improved.
Oh, wow.
You don't think?
I don't know.
Depends on the airline.
Wow.
That shall remain nameless.
Yeah, we're gonna be good today. Shares soaring though on heavy volume. The company coming out saying it successfully completed its first end-to-end call using its 5G technology. William Blair coming out saying those developments represent a significant milestone for GoGo's 5G network. Stock is up 80% year to date, 30% of the float, though, shorted. So investors kind of watching very closely.
Okay, well, the small moves in the indexes really masked some big moves taking place under the surface. I want to start with Wolfspeed, down 30% today. The chip maker shares plummeting. Bloomberg did report today that it will be taken over by creditors, including Apollo Global Management, under a proposal that would put it into bankruptcy to slash billions of dollars in debt. Shareholders could, though, actually recover as much as 5% in this proposed scenario. This is as opposed to what typically happens during a situation such as this, where they are wiped out completely in a bankruptcy. Uber shares also on the move lower today, and this as a result of some Waymo news.
I'm so excited.
Well, don't get too excited, because just because Waymos will start to be tested in New York with a human driver, this is what drove shares of Uber lower today, doesn't necessarily mean that we're going to be seeing these all over and going to be able to take them anytime soon.
Wait, so Carol's into this?
Oh
Like,
Carol loves it. I convinced her
Oh my God.
to get into one of these things. She did it. Where were you, in Arizona?
I did it in
Carol?
Arizona first. It was like evening to the airport, closing my eyes. I'm totally comfortable. I've done several since. Oh, Alex, it's kind of like
Alex, I think you're the only one here who hasn't done this.
It almost feels like you get into a spa. There's like this really easy music. The car is immaculate. Wow. There's nobody talking to you.
My face is like,
you're one
like
of those people.
Yeah,
struck dumb right now.
You know how Carol feels when, somebody talks to her next to her on the airplane, right?
True story.
No, but you get into the car and they're like, "Hi, Carol." And you're like, "Hi." Okay, it's pretty cool. Anyway,
All right, Carol
moving
obviously
along.
not concerned about the, robot overlords
Right.
taking over.
So
anytime
this
soon.
is in New York?
Yeah, this is in New York.
Oh,
This is
okay.
where they're going to be testing it out, but only with a human driver behind the wheel. So with the
And
human
I
driver.
assume, what, like in Midtown, or where is this
I
going?
don't know. We'll see.
I don't know. It's a good
I think
question.
there are a
It's
lot
gonna
of
be tough.
challenges to this service happening like it happens in San Francisco, just due to the congestion in New York. And there aren't necessarily places to pull over, legal places to
I
pull over.
hate
Like,
to break it to San Francisco. You ain't got nothing on New York.
yeah, when it comes to congestion, it's like
Driving in
easy,
New York is
easy
skill set.
peasy there. All right, Waymo shares, or excuse me, Uber shares down 1.6% today. Let's move on to some payments companies. MasterCard fell by 5.4%, but Visa is what I want to highlight, down 4.9%. Both of these companies fell over worries about the impact of stablecoins on credit card issuers. Remember, we saw this on Friday after that Wall Street Journal report that said that Amazon and Walmart were interested in stablecoins. We did hear David Sachs today telling Bloomberg TV that stablecoin legislation would cause the asset class to grow and create demand for the U.S. dollar.
I have an honorable mention. I'm going to pull a Romaine on you. Walmart, now in its longest losing streak since 2004.
Wow.
Take a moment. I mean, to be fair, it was on a huge winning streak, so take that with a grain of salt. Bond market, look at that. Nothing. Absolutely no movement there. You're looking at the 2-year below that 4% level. You're looking at the 10-year around 4.38%. There was a breaking headline about a few minutes ago saying that foreign treasuries holdings held near a record high in April. That was quite interesting. They dipped to about $36 billion to $9 trillion, but yet foreign holdings are still sticky for treasuries. So that was, of course, a big risk and a big worry for the long end of the market. So far, so good.
Yeah, so far so good, because at least for right now, where else are you going to go, right? We should also point out another headline on money market still holding at that $7 trillion level here. And it gets to a big question as to sort of what the next catalyst is for this market. With the Fed doing nothing, we're probably not going to get anything out of them until we get to the fall. I know we have an earnings season coming up, but this really puts the eyes back on geopolitics, back on the situation in the Middle East, and of course back in the situation in Congress with regards to that budget bill.
Yeah, absolutely. Check. I think you hit all of them. I was just looking again at JP Morgan when they report earnings, and it's July 15th, so I feel like that's going to be a big one in terms of what kind of outlook. It's not that far away, right?
Yeah.
But I do think
my
the next...
birthday's shortly after that.
Is it? When's your birthday?
Yeah, so just mark it.
What kind of cake do you like so that we forget to get you one?
No purple.
I'm just kidding.
Just carrots and hummus.
Yep, that's my lunch. You're doing gummy bears. A gummy bear cake. That's what's coming.
Thank God for the food court,
Has anyone
man.
thought of that?
We're also going to hear from Powell next week. He's testifying, so maybe we'll hear more there. But given what we heard today, I'm not optimistic that we'll get any more details. I'm still waiting. I guess what I'm curious about is where he's seeing strength in the labor market. I guess it has to do with the unemployment rate and what we're seeing with non-farm payrolls. He was asked a lot of questions about the labor market with specifics to the ICE raids that I thought were really interesting, and immigration. But he said it's not Fed policy to comment on these things.
Yeah.
To be fair, there is a gummy bear cake, but the gummy bears are on the outside of the cake.
Yeah, I'm trying to.
Okay, how did you get
trying
from
to
the
keep us
inside
on
of the cake?
task here.
Well, you
Come
can do a
on.
hole in it and then
This
put the
is
gummy bears
this is
in
the
it.
this is the technological
I can make it for
innovation
you.
we really need.
I don't
You're
think
talking
this is
about
what our
David
producer-
Sachs and
Yeah.
Coinbase and Circle and all that. Come on, man, gummy bear cakes.
I can
that
make
would
this
move.
for you.
That
I
would
can
move.
totally make this for you.
No.
Would bring peace to the world.
That just seems so wrong.
You better get those while you can before all the dyes are not
It is
allowed
right.
anymore.
I forgot, yeah.
There are a couple
RFK's
other
trying to ruin our
companies.
fun.
Again, bringing this back to
Kool-Aid
news.
anymore or anything.
A couple
Fun
large
dip.
companies
Remember
out
Fun Dip?
this week saying they're not going to be using these dyes anymore at the end of next year.
This alone says it was not an important Fed meeting.
Right. Yeah. This conversation says it all. Thank you.
Oh, wait. Were we supposed to be talking about the Fed?
Exactly.
All right.
All right, guys.
We got to go, Carol.
We do. I'm trying.
Sure
All right, that's a wrap. Across platform radio, TV, YouTube, Bloomberg Originals. Folks, Romaine and Alex continuing out there on television, and Tim and I right here on Bloomberg Business Week Daily. We'll see you again, same time. Not really same place tomorrow, but on Friday we will see you. All right, take care, everybody.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is Bloomberg Business Week Daily. That's Carol Masser. I'm Tim Stenovec. As Carol mentioned, as Romaine was talking about, the catalyst for really what's on our radar really has to go back to what's happening globally right now, specifically with regard to Iran and Israel. The president will be heading back to the Situation Room this afternoon, set to happen any minute now. Tensions between Israel and Iran will be his focus. He spoke with reporters this afternoon. He remained coy about whether the U.S. plans to join Israel's offensive aimed at destroying Iran's nuclear enrichment program. The president said he encouraged Prime Minister Benjamin Netanyahu in a call Tuesday to, quote, keep going with his offensive operations, adding that he gave the Israeli premier no indication that U.S. forces would participate in the attacks. The president also reacted to criticism from Tucker Carlson over the possibility of U.S. involvement in the region.
Very simple. If they think that it's okay for Iran to have a nuclear weapon, then they should oppose me, but nobody thinks it's okay. People that don't want, I don't want to fight either. I'm not looking to fight. But if it's a choice between fighting and them having a nuclear weapon, you have to do what you have to do. Maybe we won't have to fight. Don't forget, we haven't been fighting. We add a certain amount of genius to everything, but we haven't been fighting at all. Israel's done a very good job of that.
There you have the president earlier this afternoon. I want to go to Washington, D.C. now, and to Kate Sullivan. She's Bloomberg News White House correspondent. She joins us from our Washington, D.C. bureau. Kate, earlier in the day, the president said that nobody knows what he's going to do. Mm-hmm. Does our reporting indicate that he knows what he's going to do, or is it clear at this point that he's still deciding what the U.S. will do?
So he actually just spoke to reporters a few minutes ago in the Oval Office, and he said that he hasn't made up his mind yet. So he has not made that final decision, and he also added that he wants to wait until the last second to make that decision. So I think he's taken a lot of questions from reporters today as he weighs this very important decision, and I think what we keep hearing from him is that this is very much on the table. He's very serious about considering these strikes, but it seems to me like he's still kind of cracking that door open for negotiations and, still very open to the idea of Iran coming back to the table and trying to hash out this nuclear agreement that he's been trying to get for months now.
So if a hashed out nuclear agreement or negotiations is still on the table, take us through some other options that are still on the table. What should our audience understand about what the U.S. could actually do when it comes to this conflict?
Yeah, absolutely. So Trump has said, over and over again, he does not want Iran to have a nuclear weapon. And so I think right now the big question is, and what Israel is pressuring the United States to do, is to join their military offensive against and striking Iran's nuclear sites. So the United States has these very powerful bunker buster bombs that Israel does not have. And so Israel's been trying to get the United States to use those bombs to target these very deep underground Iranian nuclear facilities. It is interesting, though. This is bringing up a lot within the Republican Party because there are some major tensions within the Republican Party and within that, the farther right sort of MAGA group. Trump said over and over again on the campaign trail, a central part of his foreign policy vision was to keep the United States out of foreign conflicts, out of wars, not to start wars, and to actually do the opposite and pull the United States back, and was really painting a picture of a more isolationist foreign policy. And so I think we're seeing, with that very viral Tucker Carlson, Ted Cruz moment, just tensions are running really high because a lot of Trump's, most ardent supporters are not on the same page about this with him.
Having said that, President Trump, candidate Donald Trump, former President Donald Trump, very clear on the campaign trail about criticism of other leaders. And actually, even since he's come into the office for a second term, very critical of former President Biden, of President Zelensky, of others about wars that have come out. And so it seems to be very clear that he doesn't necessarily want to get the United States involved in a war, something that could be called a war. And again, we can get into the semantics of what exactly is a conflict, hostility versus war. Having said that, with that backdrop, can we assume that President Trump is going to be very careful?
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg Fed Wednesday. This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. Just getting word that Fed Chair Jay Powell is scheduled to testify before the Senate Committee on Banking, Housing, and Urban Affairs. That'll be on June 25th. A rally in stocks fizzled after Powell warned that tariff-driven economic uncertainty and inflation risk continue to complicate the central bank's bid to ease monetary policy in earnest. Today we had the Dow, the S&P, NASDAQ ending the session mixed and little changed. S&P down 1 point, drop there of less than 0.1%, but below the psychological level of 6,000. The S&P at 5980. Dow Industrials down 44 today, a drop there of 0.1%. NASDAQ up 0.1%. 10-year 4.39%. The 2-year 3.94%. Gold down 0.7%. 33.66 the ounce. And West Texas Intermediate crude little changed, up 0.1%. 74.89 a barrel on WTI. Family members of 737 MAX crash victims are urging a federal judge to reject a proposed deal that would allow Boeing to avoid a criminal criminal charge, arguing the company should stand trial for criminal conspiracy. Slide Insurance Holdings raised $408 million in an upsized IPO. First day of trading for Slide Insurance, up today by 19.1%. And a jury has found Karen Reed not guilty of second-degree murder in the death of her Boston police officer boyfriend in a polarizing and highly watched case. Recapping, S&P lower little change, down by 1 point. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie Pellet. Do appreciate it. The Israel-Iran conflict, the more than 3-year-old war between Russia and Ukraine, the U.S.-led tariff war, changing geopolitical relationships. Carol, these are all things that can and do affect global investment flows.
Yeah, and it's kind of interesting at a moment in time where we're rethinking whether or not the U.S. is uninvestable and also questioning the dominance of the U.S. dollar. We should point out, as Alex Steele mentioned in our TV simulcast, foreign treasury holdings holding near a record high in the month of April. So foreign investors...
So they're not selling
foreign
America?
investors... yeah, it sounds like it, at least not when it comes to treasuries,
Okay.
which is what we kind of keep watching so closely. All of this, tie it all up, and especially when it comes to foreign direct investment, it is the world of our next guest. And it's so great to have back with us in studio Michael Lowen, CEO of IDA Ireland. It's the foreign direct investment agency of the Irish government. Hello, how are you?
I'm good, Carol. Good to be back. And Tim.
There's a lot coming at everyone, and I'm not even quite sure to begin. Just give us a good macro overview as you think of the things that the G7 leaders were facing this week, are facing this week. The wars, the conflict, certainly top of mind. And, you know, we're having this interview in real time and things are going to continue to develop. But how do you see the environment right now? Is it continuing to be an uncertain one?
I think that's the word that you'd have to use, is uncertainty. And you know, when we last met, actually, just in March of this year, I think we've gone through a lot in those intervening weeks, to be honest. Probably as much as I've seen in my career in foreign direct investment, a lot has happened in a very short space of time. And when you think about from the tariffs, in terms of what tariffs means, where they're going to be imposed, at what level, in what time frame, a lot of those questions still remain unanswered as we sit today. And I think from a European perspective, we are very clear that, you know, bringing negotiation, trying to get to a point of I suppose, consensus around what this looks like. It's so critically important for investment flows and indeed for the economic prosperity of the world, you know, whether it's the US or whether it's Europe or indeed whether it's Asia. So that's a real area of focus from a European perspective and indeed the Irish government perspective. And of course, you're correct. This is all against the backdrop then of some other conflicts across the world, and you know, we see that increasing. So you know, we're very mindful of that in the context of trade flows and trade investments as well, because that brings another level of uncertainty into the equation. Yeah.
It's been pretty much exactly 3 months since we last saw you. You were here in New York right before you went to Washington with the Prime Minister to visit the White House.
That's correct.
You met with the president. You met with his team. How did the meeting go?
So you're correct. The last time I was here, I left and I went to DC with Han Taoiseach, our Prime Minister. The meeting went very well, actually, and I think actually it was in reflecting on it, you'd say that, you know, the president was actually very gracious in terms of his engagement. Yes, there was forthright discussions, and you know, he talked about the challenges in terms of trade deficit in particular.
This was before all the tariffs were announced.
Yeah, this is before, but remember, this was all very, you know, it was all very live and active at that point, because we were talking about, this is the 15th, 16th of March, so it was all becoming very transparent or apparent as to what was going to come down the tracks. So I would say that meeting and engagement very much reflected the relationship, which is 100 years between Ireland and the US. And I think in any relationship, there can be points of let's call it discussion. And that was a discussion that we had, but I would think it was very respectful on both sides.
Michael, what changes have you guys seen in investment flows? What are you seeing from your vantage point?
Yeah, so what we're seeing today, actually, Carol, it's interesting. So I can sit here today, and actually in 2 weeks' time, I'll be sharing with our Minister, Peter Burke, our results for the first half of the year. And while I can't disclose them to you on air, well, I could, yeah, but I won't. But what I can say is that we continue to see investment flows. In fact, it is a par with last year in terms of the first half of last year. which is maybe somewhat surprising given the level of uncertainty that you see across the globe. But the reasons we see that is, and we're seeing across a number of different areas, we're seeing real investment in research and innovation continuing, and companies looking to double down on their investments in Ireland in innovation. We're also seeing a lot of investment as well in terms of new entrants into the Irish economy, which is really important. And that's because they're looking for global marketplace, stable locations which is trusted and proven, I believe, and that's what they're seeing in Ireland in terms of the future growth.
I know you can't reveal all, but I am curious. So on that, where there's new investments coming in, are there conversations you're having with entities, global companies, U.S. companies who say, we want to do more stuff with you guys because we don't necessarily want to be in the U.S. or other, like, give me an idea if there's anything that's a repercussion or the result of an action by the White House.
Yeah, so I don't think it's a scenario of we don't want to do it in location A, so we're doing location B. I actually think companies are looking to actually, how can we grow our business? Where can we grow that from? What markets do we want to serve? And where can we get the skills or the policies that support that? That's really what we're seeing. And what we do in Ireland is that, we make sure we bring stability and certainty to those areas of policy in terms of talent and talent availability, not just Irish talent, but international talent. These are the pieces that are setting, I believe, investors apart when they're looking at locations around the globe. Because I said previously, at the very core of FDI and of multinational companies, they look to international markets. They need international markets. They need international supply chains. They need international talent. That's what they need in order to be successful. And that success isn't just success in the country they're located in. It actually comes back to their entire supply chain.
We're speaking to you on a day where we heard from the Fed chair, and there were a lot of questions about what the labor market looked like. The takeaway that I got from him, Carol, and I think you'd agree with this, is that he really likes where the labor market is right now, and that despite what anecdotes people hear and what people are saying, there are not cracks starting to appear. Things are looking pretty strong. Explain to us the labor market in Ireland right now in the context of these companies, especially tech companies, battling it out for top tech talent for AI.
Yeah, and I think you're just to use the comment in terms of the Fed's comments this afternoon on the labour market. Actually, the Irish labour market is somewhat mirrors, I think, what the Fed has mentioned today. It's robust. We're almost at full employment. So there is actually, I think, for economies that are performing and have a strong underlying fundamentals, I think that's mirrored across many economies across the globe. And the key is in this context is you're correct. There is talent availability and is probably the key differentiator for success for whatever business you're in or whatever sector you're in. And that's why I believe that multinational companies they see talent as global. They don't see it as within a geography or within a region. They see it as global. And I think that's what we have to continue. And we're very, I suppose, attuned to the fact that not alone do we have to generate our own talent, but we have to be able to attract the best talent to Ireland, and we have to create the conditions in which they can prosper, which they can live, and which they can and enjoy life as well.
Well, I am also curious because there is a lot of pressure from this administration, the president specifically, for U.S.-based companies, U.S.-based multinationals to do more in the United States. Having said that, I think about a company like Microsoft, who has been in Ireland for 4 decades or so.
Correct.
I'm just curious, is any of that relationship that you folks have, and especially the investments that Microsoft has made and maybe continue to do, has any of that changed?
To be honest, it hasn't. And if you think about it, you're correct. Microsoft celebrated its 50th birthday, actually, since we last spoke. And 40 of those 50 years have been in Ireland. And when we celebrated Microsoft's 40th birthday in Ireland, they spoke about how important Ireland was to the Microsoft success. Not just Microsoft Ireland, but Microsoft, the corporation, because that's what it really is embedded. And when we look at companies like Microsoft and the many more companies that we have in Ireland, there are multi-decade investments. There are trusted long-term partnerships with IDA and with the Irish government. And that's what really brings that success back. And what we have to be conscious of as well is that we need to make sure that we actually we're meeting the future needs of industry as well. So that means people, it means infrastructure, and it means policy. And that's very much what we're focused on and what the Irish government are focused on.
Well, go back to my question about AI specifically. Carol mentioned there were some layoffs at Microsoft today. There are hundreds of thousands of people who work at Microsoft, and we know thousands. Is that the latest report, Carol?
Yeah, thousands of more job cuts, and,
So we
and a
don't know
lot of it
specifically-
salespeople, I think they were saying.
And it's about making sure that you have the workforce that these tech companies need. Jay Powell was asked the same question: what is going to be the effect of AI on the workforce?
Yes.
What is it in your view, and how do you make sure that it doesn't decimate a workforce like the CEO of Anthropic, Dario Amodei, said recently?
So I think you're correct. We need to be conscious of the fact that AI is going to be a technology, and is a technology that's going to revolutionize. In fact, we see it all in our day-to-day lives and our day-to-day work. What we're looking at from an IDA perspective is we have very much looked at where is the opportunity for AI to bring efficiency and bring productivity gains. But secondly then, how do we make sure that where there are risks, we are upskilling and reskilling that workforce for future and new technologies. And that's our real focus is. In our new strategy, just to say this, for the first time, we have put a public target on upskilling and reskilling of the workforce. So 40,000 people we are committing to upscale and rescale. And that's actually not just to meet AI, but to meet all technological change that's coming.
Michael, just got about 30 seconds. I'm just curious about what's Ireland's relationship with China, and what do you think it is going forward, just quickly?
Yeah, so with China, our relationship has been the same, and the same with the European Union. I suppose it's de-risk but don't decouple. We see opportunity, but we also understand that we need to do that balance between de-risk and decoupling, and we will continue to do that.
Is China being more aggressive, though, in reaching out to a country like your own?
I can't say it is. I think we have offices in China. We have offices all across Asia. So I think it's no different today than it was this time 6 months ago.
Trying to just get an idea, right, as we look at geopolitics and new relationships being formed, whether or not, China is certainly, there's been reporting that as the U.S. backs off, China looking to kind of step in, but not necessarily anything different.
Not evident at this juncture, yeah.
Be well, be well. We know you travel a lot, so stay safe. Michael Lowen, Chief Executive Officer of IDA Ireland, joining us here in our Bloomberg Interactive Brokers studio. When we come back, a light topic, nuclear diplomacy and the reality of Iran's nuclear strategy. That Business Week Daily continues.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Turned out to be a mixed Fed Wednesday with the Dow, the S&P both lower, NASDAQ higher. This Bloomberg Business Flash brought to you by Home Title Lock. Homeowners, when was the last time you checked your home title? Go to HometitleLock.com/Bloomberg for a free title history report to make sure you're not already a victim of title fraud. That's HometitleLock.com/Bloomberg. A rally in stocks fizzled out after Fed Chair Jay Powell warned that tariff-driven economic uncertainty and inflation risk continue to complicate the central bank's bid to ease monetary policy in earnest. We had the S&P 500 index ending the day lower, little change, down today by 1 point. That was a drop of under 0.1%. The Dow was down 44, a drop there of 0.1%. NASDAQ eked out a gain of 0.1%. The 10-year 4.38% with a 2-year yielding 3.93%. Spot gold down $19 the ounce, down 0.6%, 33.68. And West Texas Intermediate crude oil today was higher. WTI up 0.3%, 75.09 a barrel on West Texas Intermediate crude. A jury has found Karen Reed not guilty of second-degree murder in the death of her Boston police officer boyfriend in a polarizing and highly watched case. The same jury found her guilty of a lesser charge of drunken driving. Recapping, S&P down a point, ending the day below 6,000 at 59.80. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Well, as Kate Sullivan told us earlier this hour, Bloomberg News White House correspondent, the president's latest meeting to discuss the conflict in the Middle East is ongoing right now. Earlier, the president remained coy about whether the U.S. plans to join Israel's offensive aimed at destroying Iran's nuclear enrichment program. What exactly is that nuclear enrichment program? What exactly is Iran's strategy? Is it for weapons or is it for energy? Is it even close to having a nuclear weapon? These are all questions that we talked about in preparation for this segment today. We've got a great voice on this. Heather Williams is the director of the Project on Nuclear Issues and a senior fellow in the Defense and Security Department at the Center for Strategic and International Studies. She's also an associate fellow with the Project on Managing the Atom in the Belfer Center for Science and International Affairs at the Harvard Kennedy School. She joins us this afternoon from Boston. It's good to have you with us, Heather. Thanks for taking the time. I think a place we want to start is just getting an understanding of exactly what the capabilities Iran has right now when it comes to nuclear, energy, and weapons. What do they have?
Yeah, well, thanks so much, Carol and Tim, for inviting me on. So before we talk about what they have right now, I want to just very quickly say what they had a week ago, because there's a big difference between then and now. A week ago, Iran had a nuclear enterprise involving 30 different facilities spread out across the country. It was enriching to 60% its uranium, which is well above the amount that you need for civilian purposes. It also had some ballistic missile capabilities. And so this was a really concerning program. And the day before the Israeli strikes, the International Atomic Energy Agency actually found that Iran was in breach of its non-proliferation obligations for the first time since 2005. So there was this really expansive program. Where that program stands now is a very different picture. One of the biggest enrichment facilities, Natanz, has essentially been destroyed. And that is partially because of the power being cut, the targeting of the structure itself. But there's one big piece of Iran's nuclear program that remains, and that is the Fordo enrichment facility, which is buried really deep underneath a mountain. And Israel has had a few strikes on Fordo, but that facility still remains. But for the most part, a lot of Iran's other nuclear facilities and capabilities have been significantly impacted by the Israeli strikes.
So how long does it take to kind of rebuild all of this, if that is ultimately Iran's plan?
Yeah, it's an unsatisfying answer. We don't know because it really depends on the extent of the damage, but it also really depends on what President Trump is going to decide probably in the next days or weeks, because that Fordo facility is going to be really crucial if Iran does want to rebuild or race to having a nuclear weapon in the near future, because that's where a lot of the higher enrichment was happening. It's a place where Iran's stockpile could be transported to. And so if that facility endures and Iran continues to use it, in that case, some estimates had said that Iran was just weeks away from having a nuclear weapon. Now, if that facility is destroyed, that will probably set Iran back by a significant amount of time. But the answer to that question, we just don't know, but we probably will know a lot more in the next few days, assuming that President Trump makes a decision.
Do you think Fordo can be destroyed without using the GBU-57?
It would be really, really difficult. It would require sustained Israeli strikes using their own bunker-busting bombs, which are a lot smaller than the GBU-57. And even then, it's not clear that those sustained strikes would get the job done. Another option would be an Israeli sabotage mission, such as cutting the power to Fordo, or some sort of commando mission on the ground, such as getting folks into Fordo to blow it up from inside. That might be one option for probably having the higher likelihood of success of destroying Fordo. But for airstrikes, it's really hard for the Israelis to do this without U.S. support. I do think it's important to point out, though, that the U.S. strikes on Fordo, if they do come to fruition, this might not be a one-and-done mission. It would be difficult, I think, for the U.S. to be able to take out all of Fordo with one of these bombs. And the reason for that is Fordo is buried so deep. Also, we don't know a lot about the extent of the Fordo facility. There could be additional tunnels even further underground. Some suspect that there are facilities buried up to half a mile into that mountain. And so the GBU-57 is probably the best bet for airstrikes and taking out that facility, but it might require multiple strikes.
How do you feel, forgive me, and this is with all due respect, but there's been so much debate about, does Iran have weapons? Do they not have weapons? I feel like it's gone back and forth. So how do we trust the intel? Or how do you determine that you can trust the intel that you've got?
I love this question. It's such an important question because there is all this confusion about the intel right now, right? Tulsi Gabbard says one thing, the president says another thing, the CIA says one thing, Central Command says another thing. And I actually think this confusion is really understandable. And a big reason for that is how you define a nuclear weapon. And I promise I'm not going to get academic about this, but it is the difference between if Iran is pursuing weaponization technologies. So, for example, triggering devices, if you want an implosion device, what do you do with all that highly enriched uranium? It's not just going to sit there. You have to figure out how to convert it into a nuclear weapon versus a nuclear weapons program, which requires the highly enriched uranium, a means of delivery, along with that weaponization technology. And so if we're talking about that weaponization technology, I think those in the intel community who said they don't see evidence of that, that seems to be pretty consistent. However, if you count a nuclear weapons program as enriching uranium well beyond civilian purposes, having secretive nuclear facilities, talking about wiping your neighbor off the face of the earth, then that also points towards a nuclear weapons program. And so I think that there's a lot less daylight on the intel than sometimes comes across. It does just require this kind of wonky, more nuanced understanding of what actually goes into making a nuclear weapon.
Heather, I have no idea if this is in your purview, but I mean, do you think that there is a world where Iran says, okay, I'm out. We don't need nuclear weapons, just quickly?
It's hard to envision that world under the current regime. They have staked a lot on this nuclear program. I don't see many face-saving off-ramps ahead for them. And they can make a pretty strong case and have international support for saying that they have the right to a civilian enrichment program. But at the same time, I don't know how the international community can ever trust them again not to pursue a nuclear weapon.
And so you do wonder, does the U.S. take the step of potentially using the GBU-57, which would be seen as a pretty strong move? And then in the long term, Iran still continues to build up its nuclear facilities for weapons.
Yeah, this is the massive bunker buster bomb that we've been referring to over the last couple of days that can only be delivered by the B-2 Spirit aircraft
so
that the U.S. has.
Right? This is probably some of the conversations the president is currently having, perhaps. Heather Williams, thank you so much. This is what we were hoping to do for the Bloomberg audience, and you did it so well. Thank you, thank you. Director of the Project on Nuclear Issues and Senior Fellow for Defense and Security at the Center for Strategic and International Studies there in Boston. When we come back, some stocks on the move on what is a busy Wednesday. Again, this is Bloomberg.